In the current economic climate, it's become increasingly clear that simply stashing your cash in a bank account may not be the wisest financial strategy. It's a common myth perpetuated by banks that money grows in value when kept in savings accounts. In reality, due to the continuous printing of money by governments and the ever-present specter of inflation, the purchasing power of cash slowly erodes over time, often outpacing the interest rates offered by banks. This is where the strategic acquisition of assets comes into play. Assets, unlike cash, have the potential to appreciate in value over time, thus preventing wealth erosion and even facilitating the creation of intergenerational wealth. However, the journey doesn't stop at these 6 assets. There's a 7th bonus asset that holds immense potential for wealth generation and preservation. This asset promises to be extremely intriguing and valuable, especially for those looking to diversify their portfolios and safeguard their wealth against future economic uncertainties. Now more than ever, it's crucial to explore these alternative avenues for preserving and growing wealth, rather than relying solely on traditional cash savings. So without any further ado, let's dive into this bonus asset and its potential for financial security. 6. Sovereign guarantee. A sovereign guarantee is essentially a promise made by a government to cover a business or project's debts if it fails. This assurance is not a mere lip service. It is a legally binding commitment that provides a safety net for investors. In essence, it is the government saying, if this venture fails, we've got you covered. Investing under the umbrella of a sovereign guarantee has been a common practice for a long time, particularly in significant infrastructure projects like dams or highways. These projects are often capital-intensive and carry a high degree of risk. By providing a sovereign guarantee, governments can attract private funding that might otherwise be hesitant to invest in such ventures. The assurance of a sovereign guarantee mitigates the risk, making these investments more attractive. The nature of a sovereign guarantee makes it a safer option compared to many other forms of investment. When you invest in a project backed by a sovereign guarantee, you're not just relying on the success of the project or the financial stability of a company. You're banking on the strength and stability of a government. This backing acts as a safeguard against losses, providing an added layer of security. The attractiveness of sovereign guarantees becomes even more pronounced during periods of economic instability or in countries with fluctuating economies. In such situations, the risk associated with investments tends to escalate. However, a sovereign guarantee serves as an anchor, offering stability amidst the turmoil. It assures investors that their investments are safe, regardless of the economic conditions. One of the most common investment methods that benefit from the low-risk nature of a sovereign guarantee is government bonds. When you purchase a government bond, you're essentially lending money to the government. In return, the government promises to pay back the borrowed amount with interest after a certain period. This repayment is backed by a sovereign guarantee, making government bonds a low-risk investment option. Moreover, some countries offer unique investment options with sovereign guarantees to draw in foreign investments or support specific sectors. These special investment opportunities provide an avenue for investors to diversify their portfolio while benefiting from the safety of a sovereign guarantee. 5. Land and real estate. Land and real estate ownership have long been synonymous with wealth and power. From ancient empires that prided themselves on the vastness of their territories to modern economies where urbanization is a testament to development, land and property ownership has always been significant. This historical relevance adds a layer of prestige to real estate investment, making it an attractive proposition for those looking to enhance their financial stature. The value of real estate is intrinsically linked to its finite nature. Unlike other commodities that can be produced or manufactured, the amount of land is limited. As regions grow and urbanize, the demand for land and property rises, resulting in increased value. This makes real estate a potentially lucrative investment, especially in areas experiencing rapid growth and development. Investing in real estate offers multiple benefits that contribute to its appeal as a safer and better asset than cash. One of the primary advantages is the potential income that can be generated through renting out properties. This provides a steady stream of income, which can be particularly beneficial during economic downturns when other investments might be underperforming. Furthermore, real estate tends to appreciate over the long term. While the market may experience fluctuations in the short run, the general trend for real estate values is upward. This makes it a good option for investors looking for long-term investments that can weather economic storms. Additionally, Some jurisdictions offer tax advantages for real estate investments, making them even more attractive. Direct investment in real estate can take several forms, including residential, commercial, or agricultural properties. However, this method does require active management and maintenance, which can be a downside for some investors. Luckily, there are alternatives to direct property ownership that allow investors to reap the benefits of real estate investment without the burdens of physical ownership. Real estate investment trusts, for example, offer a way to invest in a diversified portfolio of properties. Similarly, crowdfunding platforms have made it possible for smaller investors to partake in the real estate market. Industrial commodities and raw materials. Industrial commodities and raw materials encompass a wide range of items, including metals like copper and energy sources like oil. These materials are the lifeblood of various industries, from construction and manufacturing to energy production. Their universal application makes them essential commodities, ensuring a constant demand in the market. Historically, industrial commodities and raw materials have played a pivotal role in the development and advancement of civilizations. They have been the catalyst for major transformations, such as the Industrial Revolution, which ushered in unprecedented growth and prosperity. This historical significance extends to their role in the financial market, where they have long been regarded as reliable investment options. The appeal of investing in industrial commodities and raw materials lies in their consistent demand and potential for profit, particularly during periods of economic growth. As economies expand, so does the need for these materials. This increased demand often translates into higher prices, providing investors with an opportunity to make a profit. Furthermore, investing in industrial commodities and raw materials offers a means to diversify investment portfolios. Given their unique market dynamics, these assets can provide a balance to portfolios heavily skewed towards more traditional investments like stocks and bonds. This diversification can help mitigate risk, making these assets a safer option in volatile markets. Investing in industrial commodities and raw materials can be achieved through various methods. Futures contracts, for instance, allow investors to agree on buying or selling these commodities at a predetermined price at a future date. This method provides a way to speculate on price movements without the need to physically own the commodities. Investment funds that bundle various commodities offer another avenue for investment. These funds provide exposure to a broad range of commodities, spreading the risk and offering potential returns from different sectors. Stocks of companies involved in mining or producing these materials also provide a way to invest indirectly in these commodities. Finally, digital platforms have made investing in industrial commodities and raw materials more accessible. These platforms allow investors to partake in the commodities market without the burdens of physical ownership, making it easier for smaller investors to get involved. 3. Safe haven currencies. Safe haven currencies are those that investors turn to in times of global economic instability. They act as financial shelters, providing stability when other markets are fluctuating. This makes them particularly attractive during periods of financial crisis or geopolitical uncertainty, as they offer a degree of security that can be hard to find elsewhere. The Swiss franc and the Japanese yen are prime examples of such currencies. These currencies have earned a reputation for reliability, primarily due to the economic and political stability of Switzerland and Japan, respectively. The US dollar and the euro are also considered safe havens due to the strength and size of the economies they represent. These currencies often remain strong or even appreciate when others decline during crises. For instance, during the 2008 financial crisis, the Swiss franc and the Japanese yen appreciated against other major currencies, reflecting their status as safe havens. This tendency provides an opportunity for investors to protect their assets and potentially even make a profit during turbulent times. Investing in safe haven currencies offers multiple benefits. First and foremost is security. In an uncertain financial environment, the value of these currencies tends to hold steady or increase, offering investors a relative peace of mind. Secondly, these currencies provide liquidity. Given their widespread acceptance and the size of their respective forex markets, safe haven currencies can be easily bought and sold. This liquidity ensures that investors can quickly adjust their positions as needed, a critical feature during volatile market conditions. Lastly, investing in safe haven currencies can help balance an investment portfolio. By including assets that are expected to perform well during times of economic stress, investors can offset potential losses from other investments. This diversification is a fundamental principle of investment strategy, and safe haven currencies play an essential role in this regard. Investors can gain exposure to safe haven currencies in several ways. They can be directly purchased on the foreign exchange market, allowing investors to benefit directly from any appreciation. Alternatively, investors can invest in specific funds or accounts that focus on these currencies. 2. Gold, silver, and platinum. The allure of precious metals stretches back to ancient times. Civilizations like the Egyptians held gold in high regard, particularly for royalty, who often adorned themselves with gold jewelry. Silver, too, has triggered exploration and conflict throughout history due to its value. Gold's historical significance extends to its role as a standard for currency in many countries, underscoring its trustworthiness as a store of value. Unlike paper currency that can devalue due to inflation or economic instability, gold, silver, and platinum retain their value. This is because their worth is not tied to any single economy but is recognized universally. Their rarity and the fact that they cannot be manufactured or printed like paper money further add to their appeal. During uncertain or unstable times, these metals are considered a safe investment. Investors often flock to precious metals when other markets are turbulent, viewing these assets as a safe harbor for their wealth. This was evident during the 2008 financial crisis when gold prices soared as investors sought safety amidst the chaos. Investing in precious metals can be done in several ways. The most traditional method is physical ownership, which involves purchasing bars or coins. While this method allows investors to hold a tangible asset, it does necessitate secure storage and insurance, which can be costly and cumbersome. For those looking for alternative ways to invest, there are funds that follow metal prices, providing exposure to the market without the need for physical ownership. Shares in mining companies offer another avenue for investment. These stocks often move in tandem with precious metal prices, providing a way to profit from the metals market. In today's digital age, technology has opened up new possibilities for investing in precious metals. Investors can now purchase digital versions of these metals online, allowing them to partake in the market without worrying about storage or security. This accessibility makes precious metals investing more appealing and accessible to a broader range of investors. 1. Value stocks and mutual funds. Value stocks represent shares of companies that are considered undervalued relative to their intrinsic worth. This means that the market price of these companies' shares is lower than what the company's performance, financial health, and future prospects suggest it should be. This concept was popularized by Benjamin Graham, known as the father of value investing, who advocated buying stocks at a price less than their intrinsic value. Investors are advised to seek out companies with strong fundamentals, such as solid earnings, reliable cash flow, and healthy balance sheets, but whose stock prices are currently lower than their perceived value. The idea here is to buy these stocks while they're undervalued and hold on to them until the market corrects this discrepancy, thereby driving up their price. This strategy requires patience and a keen eye for identifying undervalued stocks, but it can pay off handsomely if executed correctly. On the other hand, mutual funds offer a different approach to investing. These funds pool money from multiple investors to purchase a diversified portfolio of stocks, bonds, or other assets. This pooled approach allows individual investors to gain exposure to a wide array of assets that they might not be able to afford or manage on their own. Mutual funds require less expertise or capital than direct stock investing, making them more accessible to individual investors. They are offered by many banks and investment platforms with various focuses, risk levels, and strategies to suit different investment goals and risk tolerances. For instance, some mutual funds focus specifically on value investing, seeking out undervalued stocks to include in their portfolios. Others might follow a growth strategy, targeting companies with high potential for future earnings growth. There are also index funds, a type of mutual fund that seeks to replicate the performance of a specific market index, offering investors a way to passively invest in the broader market. Investing in value stocks and mutual funds offers several advantages. For one, it provides a way to potentially earn higher returns than what cash can offer, especially in a low interest rate environment. Moreover, these investments offer a degree of safety. Value stocks because they're already undervalued and less likely to drop significantly further, and mutual funds because their diversified portfolios spread risk across many different assets. So here we are at the bonus asset, and let me tell you, it's a really interesting one. 7. Collectibles. In the diverse universe of investments, collectibles offer a unique blend of emotional satisfaction and financial reward. These items, valued for their rarity, beauty, or historical significance, provide not just potential monetary returns but also a deep sense of personal fulfillment that few other assets can match. Collectibles encompass a wide range of items including art, antiques, rare coins, and sports memorabilia, among others. Each of these categories carries its own allure and potential for appreciation. For instance, a painting from a renowned artist can appreciate in value over time as the artist's reputation grows, while a rare coin can gain value due to its historical significance or scarcity. The culture of collecting is a long-standing tradition seen across various societies. This hobby has evolved over time to include items like baseball cards, vintage wines, and even comic books, turning them into valuable assets. For many people, the act of collecting these items is driven by passion as much as by potential financial gain. This combination of personal interest and investment potential is part of what makes collectibles so appealing. Investing in collectibles offers several key attractions. First, there's the potential for appreciation and value. Just as stocks can rise in price over time, so too can collectibles. A rare baseball card or a piece of antique furniture can increase in value as it becomes more sought after, providing a potential return on investment. Secondly, collectibles can diversify an investment portfolio. Because the value of collectibles is often driven by different factors than traditional investments like stocks or bonds, they can provide a hedge against volatility in those markets. This diversification can help balance a portfolio, reducing risk and potentially enhancing overall returns. However, the appeal of collectibles extends beyond their financial aspects. They also offer intangible values that are distinct from other forms of investment. The joy of owning a rare or beautiful item, the authenticity that comes with a piece of history, and the connection to a broader cultural narrative. These are experiences that money can't quantify. For many collectors, these intangible benefits are as valuable, if not more so, than any potential financial gain. In conclusion, the realm of investments is vast and varied, offering avenues that cater to different appetites for risk, investment horizons, and personal interests. From the solidity and potential undervalued wonders of value stocks and the diversification benefits of mutual funds to the unique charm and potential high rewards from collectibles, each investment type presents its own set of opportunities and challenges. Whether you're drawn to the analytical aspects of stock investing or the emotional and historical allure of collectibles, the key is to research, understand, and engage with your investments in a way that aligns with your financial goals and personal passions. I'm curious to hear your thoughts. What type of investment resonates most with you and why? Drop a comment below to share your perspectives and experiences. And if you found this overview helpful, please don't forget to like this video and subscribe to our channel for more insightful content on making smart investment choices. Your support helps us continue to provide valuable information to all types of investors. Thank you for watching, and we look forward to seeing you in our next video.